Imagine you're a young entrepreneur. You sell your first company. Most people would buy a mansion, a Ferrari, take a long vacation. Elon Musk did something almost nobody else would do. He took nearly everything he had and risked it again. Then he did it again and again. At one point, he became the richest person on Earth, then lost over $200 billion on paper, and still remained one of the richest people alive. This isn't a story about luck. It isn't a story about cryptocurrency. It isn't a story about getting rich overnight. It's the story of a man who repeatedly made financial decisions that almost everyone else thought were insane. Some worked brilliantly. Some nearly destroyed him. As an accountant, what fascinates me isn't just how much money Elon Musk made, it's how he built wealth. Because if you study his financial decisions carefully, you'll notice patterns. Patterns that ordinary investors, entrepreneurs, and even employees can learn from. Today, we're breaking down the 10 real strategies Elon Musk used to become a billionaire. Not myths, not internet hype. The actual financial principles behind one of history's greatest wealth-building journeys. Let's begin. Strategy 1. Start by solving valuable problems. Most people ask, how can I make more money? Elon asked a different question. What problem needs solving? His first major company wasn't Tesla, it wasn't SpaceX, it was Zip2. Back in the mid-1990s, newspapers were only beginning to understand the internet. Local businesses needed an online presence, and Zip2 built software that helped newspapers publish business directories and maps online. It wasn't glamorous, but it solved a real problem. In 1999, Zip2 was sold for roughly $307 million. Elon personally received around $22 million before taxes. Notice something important. He didn't become wealthy because he chased money. Money followed because customers found value in what he built. The marketplace rarely rewards effort alone, it rewards usefulness. Whether you're an employee, freelancer, or business owner, your income often reflects the value you create for others. Strategy 2. Reinvest instead of retiring rich. If you suddenly received $22 million, what would you do? Most people would never work another day. Elon did the opposite. He invested almost everything into a new company. That company became PayPal. When PayPal was sold to eBay in 2002 for $1.5 billion, Elon earned roughly $175 to $180 million in stock. Now he truly had life-changing money. Again, he didn't retire. Instead, he poured huge portions of his fortune into SpaceX, Tesla, and SolarCity. As an accountant, I see one lesson over and over. Many people interrupt compound growth by spending windfalls. Wealthy builders often reinvest them. Money that keeps working can create far more wealth than money that's consumed. Strategy 3. Bet big on ownership. One reason Elon became extraordinarily wealthy is surprisingly simple. He owned large pieces of the companies he built. His salary was tiny compared with his ownership. That's a lesson many people overlook. High income alone rarely creates billionaire-level wealth. Ownership does. Employees trade time for money. Owners benefit when the value of the business grows. Even small ownership matters. Owning shares in an index fund, owning stock in your employer, owning a side business, owning rental property. The principle is the same. Assets appreciate, time does not. Strategy 4. Think decades, not quarters. Most investors ask, what will happen next month? Elon asked, what will the world need 20 years from now? Electric vehicles, private space travel, reusable rockets, satellite internet, artificial intelligence. Many of these industries looked impossible, or at least unprofitable, when he entered them. Yet he was willing to endure years of losses while building businesses around long-term trends. Financially, this is an important mindset. Markets often reward patience more than speed. The greatest investments frequently take years before they look like great investments. Strategy 5. Take calculated risks. People often say Elon is reckless, but there's an important distinction. He took enormous risks. After spending time understanding the technology, the market, and the economics. During 2008, all three of his major companies were under severe pressure. Tesla was struggling to survive. SpaceX had suffered multiple failed rocket launches. The global financial crisis made fundraising much harder. By his own account, he was nearly out of cash. He chose to split much of his remaining money between Tesla and SpaceX rather than walk away. That decision could have left him bankrupt. Instead, both companies survived. The lesson isn't to gamble everything, it's to understand your risks and accept that exceptional rewards usually come with meaningful uncertainty. Strategy 6. Build businesses. That scale selling one product is difficult. Selling one product to millions of people changes everything. Tesla didn't build one electric car. It built a manufacturing system capable of producing hundreds of thousands and eventually millions of vehicles. SpaceX didn't aim for one successful launch. It worked toward reusable rockets that could dramatically reduce the cost of launching payloads into space. Scalable businesses create exponential rather than linear growth. As an employee, your income often grows one promotion at a time. As a scalable business owner, revenue can grow much faster than your personal working hours. Strategy 7. Use failure as market research. Most people fear failure. Elon treated it as tuition. SpaceX's first 3 launches failed. Each failure cost millions of dollars. The 4th launch succeeded. Without that success, the company likely would have collapsed. Tesla also faced repeated production delays, quality issues, and near-bankruptcy moments. Every setback forced improvements. In investing in business, mistakes are expensive, but refusing to learn from them is even more expensive. Failure isn't automatically a badge of honor, but analyzing failure can become a competitive advantage. Strategy 8. Focus relentlessly. Elon is known for working extremely long hours, especially in the early years of his companies. While most people don't need to imitate that schedule, there is a lesson beneath it. He concentrated his energy on a small number of very ambitious goals rather than chasing dozens of unrelated opportunities. Financially, focus matters. Constantly jumping from one investment trend to another often produces mediocre results. Consistency and concentration can be more powerful than constant change. Strategy 9. Let equity do the heavy lifting. Here's something many people misunderstand. Elon did not become one of the richest people in history primarily because of salary. Most of his wealth came from the appreciation of the stock he owned. When Tesla's market value increased dramatically, the value of his ownership increased as well. This highlights a key distinction. Income pays today's bills. Equity builds tomorrow's wealth. Many people focus exclusively on earning more. They spend little time building assets that can appreciate over decades. Strategy 10. Stay invested. Through volatility. Tesla's stock has experienced enormous swings. There have been periods when it lost more than half its value. Those declines dramatically reduced Elon Musk's net worth on paper, yet he remained heavily invested in his companies. This doesn't mean every investor should ignore risk or never diversify. For most people, diversification remains a sound strategy. The lesson is different. Extraordinary wealth is rarely built without enduring periods of uncertainty. Successful long-term investors understand that temporary price declines are not always permanent losses. Patience often separates wealth builders from wealth chasers. What most people get wrong. Here's where many headlines create a misleading picture. People say, Elon became rich because of Tesla. Not exactly. Tesla made him extraordinarily wealthy, but it wasn't where his journey began. His path looked more like this: solve a problem, build a company, own a meaningful share of it, sell or grow it, reinvest the proceeds into the next opportunity, repeat. Each success funded the next. It was a series of calculated decisions over decades, not one lucky break. Lessons for ordinary people. Now, unless you're planning to build rockets or electric cars, you may be wondering, what does any of this have to do with me? Quite a bit. You don't need to become Elon Musk to apply the principles behind his success. Here are 10 practical takeaways. 1. Solve problems that people value. 2. Reinvest windfalls instead of spending them. 3. Build ownership, not just income. 4. Think in decades, not weeks. 5. Take calculated, not reckless risks. 6. Choose opportunities that can grow over time. 7. Learn from failures without letting them define you. 8. Stay focused on a few important goals. 9. Build assets that appreciate. 10. Stay patient when markets become volatile. None of these ideas guarantee billionaire status, but together they form a framework that has helped many people build lasting wealth. Conclusion. Elon Musk's story is often portrayed as one of genius, controversy, or ambition. Those qualities may have played a role, but when viewed through a financial lens, another pattern emerges. He repeatedly solved difficult problems. He maintained significant ownership in what he built. He reinvested rather than consumed. He accepted calculated risks, and he stayed committed through periods when success was far from certain. Not every decision worked, not every risk paid off. But over time, those principles compounded, and that may be the most important lesson of all: wealth rarely appears overnight. More often, it's the result of disciplined decisions repeated over many years. If you enjoyed this breakdown, let me know in the comments. Which of these 10 strategies do you think had the biggest impact on Elon Musk's success? If you found value in this video, please like, subscribe, and share it with someone who enjoys learning about business, investing, and personal finance. Thanks for watching, and remember, plan, invest, grow, live freely. See you in the next video.